Hi, I'm Mike Bernick, Director of Research at Weiss, and here's my take on the markets and how to profit from it. Today is Thursday, August 17th, 2017, and I think markets are going to be in for a big surprise that most investors aren't expecting over the next few months, and that's because the Fed has literally painted itself into a corner on monetary policy, and I think expectations surrounding the Fed are about to change with major implications for markets. You see, the economic data has been picking up recently with strong labor market readings, very strong retail sales reported just this week, including upward revisions to previous months, as well as very strong corporate profit growth. So the Fed is literally running out of excuses why not to raise interest rates and begin the process of unwinding their $4.5 trillion balance sheet. That's why markets are in for a surprise that most investors aren't expecting. And that surprise is going to be a major rebound in the US dollar. The US dollar has been killed all year because of expectations the Fed would not raise interest rates as rapidly as expected. That's become ingrained in the market, but I think it's about to change for the reasons I just stated. Now, if we see a strong dollar rally, which may have already begun, it's going to be a major headwind for commodities. So expect more volatility ahead for gold and oil on the downside, especially gold. In fact, we see a much better buying opportunity in commodities, particularly gold, later this year, towards year end in fact. But the biggest impact of all of a strong dollar will be on stocks. You see, the strong dollar undercuts the double-digit profit growth we've seen from the S&P 500 over the last 2 quarters in a row, which has really just been an illusion caused by a weaker dollar. Do you know that 55% of the companies that get the majority of their sales and profits from outside the US beat earnings estimates last quarter, but only 30% of the S&P 500 stocks that are domestically oriented, that get most of their business from inside the US, only 30% of those companies beat estimates. So what that tells me is most of the profit growth we've seen is really just coming from dollar translation, weaker dollar. So if we do see that strong dollar rally, I expect it could be substantial, perhaps as much as a 15 or even a 20% rally in the US dollar index. How to profit from it? First would be the euro currency, which has been on a tear this year as the dollar has gotten weaker. I expect a major reversal. The euro traded as low as 106 to the dollar earlier this year. It's now up to 119. That's a major move in currency markets. If we see even half of that unwind, it would be a huge profit opportunity for inverse ETFs tied to the euro. The other big impact is going to be on stocks, especially emerging market stocks that are very sensitive to a strong US dollar. And as I just explained, US stocks could get hurt as earnings growth is reassessed in light of a strengthening dollar, reducing earnings expectations. That's how I see the markets. I'm Mike Bernick. Good investing.